Hello investors and traders, today we'll speak about 3 dividend stocks, nice and great dividend stocks to buy right now with a high dividend yield. So let's start with the first company for today. It's Philip Morris, it's a tobacco company, its current dividend yield is more than 5%, and of course let's start with its fundamental parameters. So we see market cap more than 150 billion bucks, dividend yield 5.5%. And of course, this company is a holding company engaged in the manufacturing and sale of cigarettes, tobacco, and nicotine-containing products. Its products include cigarettes and reduced-risk products, including heat not burn vape and oral nicotine products. So its current valuation, we see 17 P ratio, average S&P 500 15, so it's very close to the average valuation. NPS around 4, but before PS, price per revenue, but we see a very high net profit margin. Yes, so PS is also right. So the valuation is generally, I think it's very valued. Last 5 years we see that the revenue is grow a little bit, but generally it's very stable. And of course the net profit margin is, for me, it's very impressive. Look, it's about 30%. The gross profit margin is 64, so very highly marginal company, very marginal business. The breakdown of its revenue, we see that combustible tobacco gives about 70% of its revenue to the company, and smoke-free products by 30. Also, the revenue by country, we see, I surprised, I thought it in the US, but here we see only the European Union 38%, on the second place South and South Asia, and Middle East and Africa about 12%, and Japan also 12%. But the American gives pays to the company only 6%. Very interesting information. So look, the payout ratio is 86, it's quite high, but we see that the company last 5 years, at least 5 years, continue its dividend payments. Of course, it's very good news that the company has such impressive dividend history. Let's have a look on the chart of this company. So what we see that as I think it was an impulse here, the first, the second, the third, the fourth, and the fifth since 2020. By the way, the third is usually the largest wave in the impulse, so the probability of this scenario is very high. Now we are in correction. Most probably it's ABC move, and I'm thinking that the wave C may finish here, and of course after a correction expecting another impulse. So here I'm expecting Philip Morris stock to start to grow, to start bounce from these levels. Don't forget that 5% dividend yield, it's very nice, and the company steady increase its dividend payments. Let's have a look on the second company for today. It's IBM, it's IT company. Before, let's have a look on the chart. So here we may see a major support level since 2099. So now we traded very close to this major support level, and actually last 5 years we traded in the range. The range is between 125 to 156 bucks. So now we're in the lower border of this range, and also the momentum indicator, the RSI on the weekly time frame is 40, so the stock already oversold. So it can be a nice and good time to consider buying the stocks. By the way, the dividend yield is more than 5%. And of course, let's have a look on its fundamental parameters. So market cap is more than 100 billion bucks, and a lot of employees. The company founded more than 100 years ago. Let's have a look on the valuation. So the P ratio now is very high, and the PS is only, the PS is less than 2, so the PS is very cheap. But the P, we see that it's grow a little bit last year. Maybe that it's because the net income of the company decreased significantly last year. But I believe that it's not a problem. It's just temporary. The breakdown we see by its revenue. So 41% is software business, the consulting 31, and in structure is 25%. Most of its revenue, 41%, the company earns in US and Europe and the Middle East is about 30%. The dividend, so the company, you see 5 years, all last 5 years increasing dividend per share, and the dividend yield now is trading at 12 month 5.2%. Also, we see that the company for the last 4 years continued to decrease its amount of debt. I remind you that now we are living in an environment of highly elevated interest rates. The Fed fund, the rate is now 5%. Also, in the beginning of May, it's expected, it's very high probability that we may see another hike. So the interest rate most probably will be 5.25%, and of course companies with a lot of debt on its balance sheet, it can be in a problem. So it was 68%, now 68 billion bucks, now it's about 454. So for me it's quite convenient debt level for this company. And let's have a look on the last company for today. It's Coca-Cola. So look, in my mind, last 12 years, even 14 years, we traded in a decreasing channel. Now we're very close to the highest border of this channel. But anyway, here I see another potential to grow. Let me check. So here the growth potential is at least 6%. The dividend yield is very close to 3%, and of course let's have a look on its fundamental parameters of Coca-Cola. So market cap, it's a huge company, 176 billion bucks. The dividend yield 2.8%, and the amount of employees, it's 82 kilo. I think most of you know this company, most probably tasted the products of this company. The PA 28 and PS ratio of 6, so it's not a cheap company, but we see that the revenue of this company for the last 5 years continue to grow, and the net profit margin is 22, so it's quite impressive figure, very highly marginal business. Also, most of its revenue the company earns in US is 35%, and the other global is 25%. So the company continued to increase its dividend payments for the last 5 years, and the trailing 12-month dividend yield very close to 3%. The payout is 78. It's not a low payout ratio. It means 78% from its net income. Company usually pays as dividends. So if we would see a figure of 40, 50, it would be better. But don't forget that that Coca-Cola, it's a great company, huge company. That's why I think that the payout here is not so low, not such low. That level, by the way, the companies decreased a little bit last years. And also look, if you have the debt amount of 40 billion bucks, the free cash flow, the amount of free cash flow, I remind you that free cash flow is usually the investment, the cash from its operation activity minus the investment. So it's about 10 billion bucks. So in 4 years the company may pay its whole amount of debt with any problem. So also I consider it as a It's a good parameter. So for me, Coca-Cola is the last dividend stock for today. I remind you that now this year is very tough year, maybe very tough year for the stocks market. That's why I prefer to buy dividend stocks to receive stable cash flow. Also, I looking for companies that continue to increase the dividend payments. So in this year, I'm of course a dividend investor. My personal performance, it's public portfolio. And its performance is more than 20%. I have different assets in this portfolio. So generally speaking, for me, it's very successful year. Of course, I continue to receive dividends from such companies like WBA, AT&T, Philip Morris, but it also uh, very convenient for me. So if you like this video, of course press the like button. Don't forget to subscribe to my channel if you're interested in dividend investing, stock market analysis, fundamental analysis. So thank you for watching, and of course see you on the next time. Bye.